Welcome to the Fast Five by Fear and Greed. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
Today, in just 5 minutes, we'll try to figure out what's going to happen in the local share market this year. Sean, the ASX had a good year in 2021, and even if you're not an investor, most of us benefited through our super funds.
That's right. The S&P ASX 200 was up around 12% or thereabouts, but the outlook is changing as economies reopen and we learn to live with COVID. Of course, that means something for interest rates. Matthew Kidman is the principal of Centennial Asset Management. Good morning, Matthew.
Hi, Sean. Hi, Michael.
What are the big factors you're thinking about that will affect equity markets over the next 12 months or so?
There's always two factors that determine equity prices: earnings growth and the level of interest rates. And both of those are on the agenda this year. Interestingly, what normally happens is it's classic share market cycles as we're playing out now. We had the crisis, which was back in the COVID crisis where everything shut down. We went into recession. They slashed interest rates. The equity market bottomed very quickly and bounced. And now as we come out of it and we all feel a bit better and we're back out on the street and we're spending money and shops are open, the equity market is sitting there going, well, I'm not so sure. We've already rallied. We've got other considerations. So I would expect earnings growth to switch a bit. It won't be huge this year. I know the Treasurer is trying to get everyone very excited about next year, but it probably slows off the bottom, off such a low bottom, and interest rates will start to head up. I don't think they'll head up in Australia, but they will in the US, and that will be enough to temper expectations for 2022 from the share market.
Okay, what about particular sectors? We've seen tech stocks do incredibly well in recent years. Will that continue? What about those other more defensive style sectors, healthcare, infrastructure, etc.? Then what about the cyclicals? How will they go?
Yeah, that's a really interesting question. I think for the first 6 months, the US is going to be totally focused on how much interest rates go up. They're going to move, I would say, between March and June. I'm talking about the Federal Reserve at the short end. And I don't think inflation will get away from us. I'm in that camp. I think it is a little bit transitory. It's a little bit longer, but that will affect tech stocks, I would think, in the first half of next year. So you probably want to be underweight those companies. In the meantime, you've got to transfer probably some of your money into companies that benefit from an uptick in the cycle. And when I mean that, the economic cycle, as we are opening up. And I would put into that camp, you've probably got to look at some of the things we're in, old world media, when I say that, television, radio, those kind of things. You would have to look at genuine base metal prices and companies that get you into that. I know we've had a great nickel and copper boom. That's more around the battery scenario, which is also good, but you probably want to be a bit more broader because as economies open up and economic growth trundles along without COVID hindering it, you're probably going to get a fair bit of leverage in those commodity prices. And I would say that's where you want to head.
Okay. Last year we heard plenty about ESG, and particularly the environment as a result of COP26 at Glasgow. How big a trend or how important is that in the market this year, do you think?
Massive. Absolutely massive. If you go back to 2021, the conversation was always there and thereabouts with most companies that they're heading towards having a policy that suited that ESG theme, which is more than just the environment, as we know. But then by about mid-year to late year, it moved up the pitch decks or the presentations from the back page to the front page. And everyone wants a solution. And it is very important and investors are demanding it, and it's come a lot quicker. So companies have to scramble, but they're using it smartly because they think it's an opportunity to expand their business and tell a new story. Whether it is in the short term, there's definitely a transition, but an opportunity. But it's a massive theme that every company we speak to now has a conversation and a strategy around.
And do you think there's any other major thematic that's likely to become more prevalent? Maybe it might move to the front page of the pitch deck, but maybe page 2 or 3 that we're not really seeing at the moment?
Well, I think one thing that people are forgetting, we go to a federal election in Australia in May. It looks like May. The campaigning has virtually started already. Now that the politicians are allowed back in Queensland, that's the big swing state. So I think that is actually going to keep the Reserve Bank fairly timid in Australia on rates. I think we can enjoy lower rates for a bit longer in Australia. That won't affect the US, obviously. It's also probably going to affect economic growth a little bit in Australia as everyone puts their wallets away while there's an election on. So it sets us up for a stronger second half of the year. So I don't think anyone's talking about that. So I think company earnings into June 30 which is our full year, might be a little bit tempered. We've had the COVID outbreaks and then we're going to walk into election. But I think that sets us up if we get a good outcome in the election. When I say good, a clear result, because it's going to be tight. It's going to be campaigned hard. If we get a clear result, I think the country can kind of dust itself off and get over COVID and have a run after that. So I don't think enough people are thinking about that in terms of timing.
Fantastic. Matthew, thank you for talking to the Fast Five.
Thanks, guys.
That was Matthew Kidman, Principal of Centennial Asset Management.
It's going to be a big year, Sean.
It is going to be a big year. I'm looking forward to it.
Yeah, absolutely. And as always, we certainly recommend getting professional advice before making any investment decisions. Thank you very much, Sean.
Thanks, Michael.
That's it for today. Make sure you've hit follow on the podcast. I'm Michael Thompson, and that was The Fast Five by Fear and Greed.